Hello, I'm Maggie.
And I'm Hannah. Today we're going to be talking about how to keep market norms from invading social norms. For our tutorial, we will be discussing the difference between market and social norms, the effects of both in a relationship, and how to best navigate relationships in a world where both of these norms exist.
So what are social norms and market norms? According to Dan Ariely in his book Predictably Irrational, social norms are the friendly requests that we make of one another, while market norms are what we are willing to accept and give payment for. Social norms are warm and fuzzy. These requests do not imply immediate reciprocity. Market norms are very rigid and set in stone. With these, you get what you pay for. Compared to social norms, market norms seem evil or mean, when in fact they are not. They do imply comparable benefits and prompt payments, which can seem harsh, but they also promote individualism and self-reliance. Market norms are easier to establish than social norms, and once you introduce market norms into a relationship that was once governed by social norms, it is almost impossible to reestablish those social norms.
Unfortunately, there are some situations where social norms and market norms intertwine. Some examples of social norm relationships would be friendships, romantic relationships, and social relationships where there is a less personal relationship. Examples of market norm relationships would be employers and their bosses and teachers and their students. Situations where social and market norms sometimes intertwine would be when a work relationship between a worker and their boss begins to develop characteristics that look more of a friendship or personal relationship than the prior business relationship. Another example where social and market norms merge would be in a friendship where one friend gives a pricey gift for their friend's birthday, and the receiving friend now feels as though they might have to give a similar price gift to them for their birthday. As in a romantic relationship, social and market norms can overlap if one partner in the relationship pays for every single date and grows tired of carrying all of the financial weight in the relationship.
What if you're in charge of a business? Which are the best norms to adopt? It really doesn't matter all that much, as long as you pick one and stick to it. For instance, if you decide to adopt social norms, then all of a sudden you introduce market norms. Your client will take personal offense to it, and you will most likely lose their business. But what about friendships? How do you keep market norms from invading this world where social norms really are the best to have in place? Well, it starts with you. If you are doing a favor for your friend, do not expect anything in return, especially money. If you do expect money in return for your favor, and your friend happens to give you money after you complete a favor for them, this could create what Nobel laureate Daniel Kahneman calls a halo effect. According to Kahneman, a halo effect is a cognitive bias about a person that is caused by unrelated features of them. You could possibly assume that just because your friend repays you with money once for a favor, they can afford to do that for every favor you complete for them, and you will come to expect it. Because market norms have been introduced into your friendship, the first time your friend does not pay you back for a favor, your friendship will most likely dissolve. If you are the friend that receives a favor and you do want to repay your friend with something, the best thing to do is to buy them a gift that you do not disclose the price of. Yes, repaying them in cash is more rational and economically efficient. However, giving a gift will strengthen your relationship with that friend, whereas cash would introduce market norms and the friend into the friendship, and it will most likely never be the same.
As far as relationships go, once market norms are introduced into romantic, social, or other personal relationships, social norms are difficult to try to recover. For example, in a romantic relationship, it would be ideal to make sure to alternate paying the bill every other day. In the beginning of the date, however, we do expect the male to pay for the first couple of dates. After the relationship begins to get more serious, in order for market norms to not invade your romantic relationship, it is ideal that each partner alternates or at least does their fair share of paying for each other. Also, some people begin dating someone solely based on their income. When starting a relationship that is based on the income of the other partner, you automatically establish the relationship in the market norm rather in the social norm domain. This is shown in an example in Predictably Irrational with a woman who made a Craigslist ad seeking a man who earned more than $500,000 a year. Instead of a social norm domain, she looked as though she was offering a business transaction. If you do decide to date someone based on their income, just make sure you are aware that your relationship is going to be governed by market norms, and social norms will be close to impossible to establish. Lastly, according to Daniel Kahneman, we are prone to seeking out causal interpretations and coherent narratives. If market norms are introduced into a romantic relationship, one might find an incorrect but coherent cause for that introduction, and that could feed into unhealthy assumptions into the relationship. That being said, it would be the best to try not to find causal interpretations to kind gestures that involve money. Or, if you are the one giving the kind gestures, know how that can be interpreted and make it known that it is something that won't be done all the time.
So now you know the difference between social norms and market norms, some examples of where you see them in the world, and how to best handle them in your life. We hope you learned something in this video that will help you better navigate these norms in your life.